This sort of goes to a note that Citi put out last week talking about a global trade war. It was quite poignant. It said a metastasized global trade war could trigger a cascade of economic and financial reactions and top the economic growth into recession. Where are we in that potential thesis?
Well, we're still at the stage that it is a trade war and a global recession driven by trade war are avoidable. Right? But we need, I think, something like a truce at the end of the month at the G20 meetings, decision probably to put the 25% on the terminal, 300 billion of imports, put that on ice, and keep on, especially keep the negotiations going, keep talk going. Then I think the chance that we get to the end of the year and beyond without a material global slowdown, there'll be some damage done, but that's manageable. If there is no deal and no truth at the end of the month in the G20, then I think the prospects for the global economy are significantly worse.
Willem, we're putting up a chart actually you provided us here that indicates the GDP, projected GDP growth or lack of growth. And what you have different colors there off on the right depending on what the effect is. There's a direct effect from trade wars, and then there are less direct effects on things like wealth, negative wealth effects.
And also confidence effects, especially working both through capital expenditure on the corporate side and through household expenditure, especially on consumer durables, through precautionary saving. So yes, the trade war and trade effects don't just work through exports and imports. They work through investment and indeed through consumption as well.
And so if you wrap this into sort of watching the protest over in Hong Kong where, HIBOR interbank interest rate pops, so borrowing costs are higher, so you could make that idiosyncratic, but how much of the conversation in 6 months is going to be about higher borrowing costs elsewhere, tighter financial conditions elsewhere, as we sort of remanage trade flows? Well,
I do not think that the trade flows, the trade war by themselves will have any direct impact on financial conditions. If anything, key central banks around the world, from the Fed to the ECB to the Bank of Japan, are going to be looser with their policies, trying to prevent a tightening of financial conditions on top of a possible worsening of the trade war. So I don't think that financial conditions are going to be necessarily the killer of this global expansion.